Hello. Today we are going to discuss about the differences between internal check and internal audit. As we all know, internal check means it is a work which is done by one person will be automatically verified or checked by another person. If A has prepared sales book, that will be verified by the person B, and again that will be verified by the person C. The same book, the same account will be verified by the internally employed person. So checking the accounts by the employees within the organization is called as internal check. What is internal audit? It's the audit which is prepared, which is done to find out the various error, fraud which has been made in the books of accounts at the time of preparing the accounts. Now we'll see the differences. The first difference is, internal check, it's an arrangement of duties allocated in such a way that the work of one person is automatically checked by another. So internally within the organization, check means to verify, to find out. So the arranging of duties allocated in such a way that the work of one person. So as I said in the example, if the A person has prepared the sales book or sales account, that will be automatically checked or verified by the another person. So why? To prevent the or to know the what actually the wrong has been made by the person. Next, so what is internal audit? So it is an independent appraisal of the operation and records of the company. So it is an independent. So there is no need to do the internal auditing. In case if it is required, only then it can be done. But internal check, it has to be done compulsorily to minimize the error. See, internal audit, so it is just an independent means, so it depending on the institution, they may or they may not conduct the operations. Second one, the purpose of internal check is to prevent, minimize possibility of error and frauds. Obviously, why they are going to check the books of accounts prepared by others or the staff to minimize the possibilities of errors and frauds. In case by miss, if any error has been occurred, if any fraud has been entered or made by the employee, knowingly or unknowingly, that can be easily minimized and it can be easily prevented. And internal audit, the purpose of detect errors and frauds, they are already committed. So in case by miss, if the fraud has been committed, in case if the error has been made in the books of accounts, to detect means to find out, to rectify, to find out. So where exactly the fraud has been done and where exactly the error has been made. Error maybe knowingly or unknowingly, the fraud by purposefully, by knowingly, the error will be made. For example, so when they are preparing the for example cash account, so the payment has been made to the employee A, the payment actually is 10,000, but in the book they would have written 12,000. That is the, by knowingly they have written it has 12,000, but actually it is 10,000, but the fraud they are making, they are entering the values 12,000 is a fraud which is made to find out like this type of thing. The internal auditing is needed. Third one, internal check requires a separate staff. It represents only the agreement of duties. So it doesn't require. So it doesn't require any separate staff. So whatever the present employees are available, whatever the already the employees are available in the organization, so they themselves will perform the task, perform this work checking work. But in case of internal audit, it requires a separate staff employed only for this purpose. So the purely to detect error and fraud, the separate staff has been employed only for this purpose. To find out, detect, to find out the error, to find out the fraud, to detect the fraud, the separate employee that will be employed for this internal auditing work, for for that people, for that person, the remuneration has to be paid separately. Then internal check, it is a continuous process. So your internal check is nothing but checking the books of accounts automatically by one person or another person. Okay, but it is continuously. So it has been done. It may be every week once, 15 days once, or monthly once. Why? To minimize the possibility of errors and frauds in the business. But in case of internal auditing, so internal auditor has to report periodically about the various ineffectiveness and suggest improvements. So here you need to report periodically. No need to give a report to the management or to the owner, to the shareholder. It may be daily, weekly or monthly. So whatever the work has been done, you need to report periodically, maybe once in a month or 6 months once or a quarterly, so on, about what various inefficiencies, so where the error has been occurred, where the fraud has been made, so where the expenditure is more, so and so, and suggest the improvements. So not only detect the errors and frauds, but also you need to suggest that how the improvements can be made, developments can be made in the business. Like you can give us suggestions like how to increase the sales, how to increase the profit, how to minimize the cost, so on. Clear? Then internal check begins along with the recording of transaction. As soon as the financial transaction takes place, so the internal check begins. And coming towards the internal audit, it begins when the audit accounting process ends. So once all the completion of all the books of accounts has been closed, the separate staff will be employed by the company, by the organization, and that will be then he is going to start this internal audit work. But in case of internal check, so it begins as soon as the recording of business transaction takes place. Okay, so when the accounting year starts from April, so it may be from April 1 accounting business will be commencing. So in the first week of April they go for internal check. Second week of April they go for internal check, where to know where the error has been done and minimize the possibilities of errors. And coming towards the internal auditing, it begins only when the accounting period ended is on 31st March the particular year. Next, it is devices of doing the work. So it is the devices of doing the work. So here what happens here? So they have to work. They need to work. They need to check the accounts thoroughly. There should not be any fraud or error. So they have to work. So they have to prepare the accounts, they have to maintain the accounts, and they need to examine the accounts to find out the errors and frauds. In case of internal auditing, so it is a device of monitoring the work. Here he won't prepare anything, he won't do anything, he won't maintain anything. Just is going to monitor, is going to check whether all the accounts have been prepared in the right way or not. Next, scope of internal check is limited, especially to the accounting department. So why? Because the internal check has been done only within the respective departments only. Sales department only sales, so accounting department only accounting departments. That's all. They won't do the entire auditing work. But in case of internal auditing, the scope of internal audit goes on beyond the accounting department. So in case of internal auditing, so each and every department, for example, if the company has 3 departments, one is marketing department, one is accounts department, one is sales department. All these departments will be audited, will be examined, will be verified, and the report will be given by the auditor. But in case of internal check, only it is done only with the accounting department, not of any other departments. So these are all the differences between internal check and internal audit. Thank you.